Good morning and welcome to today's webcast, How to Manage Complex Changes and Achieve Corporate Stability. Before we begin, I'm going to play a brief housekeeping video.
Welcome, and thanks for joining us. We're pleased to present another in our ongoing series of continuing professional education webcasts to help companies and individuals conquer challenges as they plan for what's next. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download the group attendance sheet and a PDF copy of today's slides from the slide deck and handouts widget to the right of the slide view. You can ask our presenter questions during the webcast by typing a question in the Q&A window below the slide view and clicking Submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. Today's session will offer you 1 CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% of the polling questions, which we'll ask throughout today's presentation. To respond to a poll, click the button next to your answer. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget to open a PDF file that you can save to your computer. Don't worry if you can't download your PDF certificate today. We'll email a copy to you in 2 weeks. If you're attending this webcast in a group, you must complete our attendance sheet to receive CPE credit. The attendance sheet is available in the slide deck and handouts widget. Please have all group members sign it and send only 1 sheet per group. Also note that CPE credit can be awarded only to participants registered as themselves and isn't available to participants who view the on-demand version. As a reminder, the presentation you're about to see isn't legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
I'm pleased to introduce today's presenter from Moss Adams, Chris Lang, Director, Transaction Services and Restructuring Services Leader. And with that, I will turn it over to Chris to get us started.
Thank you, Emily, and thank you all for your time. As Emily mentioned, I am Restructuring Services Leader, and I'd like to talk to you today about the complex challenges, more specifically within the oil and gas industry. So with that, kind of start out with the objective: to learn the signs and symptoms, affording different methods to resolve and manage complex challenges to achieve corporate stability. So the goal, the way I kind of look at the goal is corporate stability. What that looks like, how that looks, and where that goes can be different for every organization. With that, got a couple different points that we will touch on, dive into, and talk further about. The following, the definition of restructuring. What's the true definition? Kind of how does that equate to different things? And, what to look for. Then kind of following up with that are the advantages of the different restructuring methods, the different focus, the different areas. Followed up by example of benefits. What can be looked at? How would that look and what can be done? Then followed up by categories for corporate restructuring. So I put 4 different categories to define corporate restructuring. And then I go into each of those categories into further definition, example, focus, symptoms, and kind of the benefits of that. And then further, example of indicators. What are different indicators that can be utilized from borrowing bases to the price per barrel or underwriting at different assumptions. And then finally, who can benefit? Kind of to look at who can benefit, who those stakeholders are, and what that looks like. And then finally, conclusion from there. So to get started, go into the definition of restructuring. Restructuring Defined is the reorganization of a company with the idea to achieve greater efficiency and profitability through changing the different functions of the organizational structure, and understanding that organizational structures are unique, they're living and breathing, and they constantly move. So, what organizations look like, every organization is going to be different. Even though they may be in the same industry, they may be competitors, they may be next door to each other. Each one of these have symptoms that may be common denominators, but are ever-changing based on the human resources, the employees, the clients, what stage you are in your organization. Are you in a mature industry? Are you in less mature industry, emerging industry? There's lots of different things that can happen, can change, or need to be changed in order to create, as I said before, greater efficiency and profitability. And those can take many different forms. So with that, the purpose, make a company more profitable and integrated through the following. So focusing on and improving the main strengths and advantages of the enterprise. Looking at organizations, lots of organizations have strengths, lots have weaknesses, lots have opportunities, lots have advantages that may or may not be taken, for lack of a better term, advantage of. Really it's digging in deep, diving in to the organization to look at, okay, what do we do well? How do we exist? Should we exist? Should we change, that particular service, that particular product that we are looking at to make it more profitable, more, utilization friendly for some companies? So it really looks at what are the different indicators of what you're looking at. What are the different indexes? What are the different variables that can be looked at in order to strengthen what's currently there? Advantages. Do you have a market advantage? Do you have a competitive advantage? Is your product better than others? Are you seen as a quality product, a quality service out in whatever business environment you're in? Further that, maximizing the value creation for all stakeholders. The ultimate goal is to create value, create profitability, not only currently, but in the future. So with that, are the different stakeholders of your business. And every business is different, but, common stakeholders, employees, management, vendors, you've got creditors, you've got equity holders, board of directors. There's lots of different stakeholders to different organizations, and organizations vary based on, lots of different variables. So looking at that from not only the outside in, but the inside, oftentimes getting a third-party view of, basic knowledge from a broad range of what is happening and what has happened can definitely help look at, where to go in the future, help kind of look at things from a, outside perspective in. Is there something that's a bottleneck? Is there something that's holding you back that oftentimes, if you're in the thick of things, you may not detect or see right away? Kind of going into it further, modifications of capital and debt. This is something that, can help, can hurt, can change organizations. This is something that you look at and you say, okay, do I have the current debt structure? Do I have the current capital structure in place that is going to afford me where I need to go in the future based on where my forward-looking forecast, projections, budgeting, management planning, growth planning analysis based on where you see the industry, where you see your clients, where you see vendors and everybody moving. You need to look at what can be modified, if anything, or changed in that capital structure. Is it an ownership structure that needs to be changed? Is it that debt structure that is holding you back, that is costing and a huge expense, weekly, monthly, quarterly, annually? I mean, there's lots of different things that can be looked at. I mean, do you need CapEx projects for new capital to come in? So how is current capital modified, current debt structure modified to allow that to change? There's also to look at leases and other avenues of potential expenses and financing. Kind of going into the next one, changing the relationships between different components of an organization. Lots of organizations have many, many, many different departments, many different components. You've got operations, you've got the administration, you've got the finance, you've got the marketing, you've got the sales. I mean, those are just typical ones. How do they all intertwine? How do they work together to get that ultimate goal of efficiencies, synergies, and profitability in order to grow, get you out of whatever situation you're in? If you're not in a true, either distressed situation or challenging situation, how do you move forward? Because lots of things are always changing. How are you dealing with those changes? How are you evolving to get better? If your goal is to get bigger, how are you evolving to get bigger and really structure your organization to make that a positive environment, but also advantageous valuation-wise? And so there's a lot of different things that can be looked at there. And that kind of goes into the next bullet point of reorganizing the operations, legal, ownership, financial aspects of the company to create positive trends and elements. Operations, you look at operations and most people look at it and say, well, there's always something there that can be changed. And maybe somebody says, some organization says, hey, our operations are as efficient as can be. Maybe it takes a third-party opinion to go, well, hey, what about this, this, and this? This is what I've seen before. This could be tweaked a little bit. So it's not necessarily changing, but it's tweaking in order to get that more efficiency. Legal, there's lots of different entity type structures. There's lots of different contracts, negotiations, things that have that legal aspect to it that need to be taken in consideration. Ownership. Is your ownership the right structure for your company now? It may have been in the past, but is it working for you now to get to that ultimate goal? And ultimately, then the financial aspects of a company. What are the results of the operations, what you're doing in your company, and how can you look at that in the way that you all want to see it and measure, that performance? So, a different tool that a lot of times we look at, and a lot of these situations we get into where there are distressed or there's stress or there's situations of change, is the cash flow management. 13-week cash flow is a common tool that's used that really gives you a view not only weekly, 13-week, but it can give you a daily, it can give you every 2 weeks, month, whatever needs to be looked at as, okay, here's my sources of revenue that are coming in. Here's the timing, so you can cash plan based upon what your true expenses are. Anything from vendor payments, fuel, to the employee base. Make sure that all of that's covered in a timely manner. And as per the contracts, not only of your clients, are they paying on time? Are they getting a little further out so you can kind of see the movement of what's needed? Or do you need to go, sit down with them, be more integrated with your client, be more integrated with your vendors to create change, to kind of reorganize what's going on? So sometimes that's needed as well. And then change in management control and management structure. I mean, you look at management control, management structure, there's all sorts of different management structures, the way they control things. Is it truly management that are making those decisions? Is it a board-driven type situation? There's lots of different views for this. Is there a CEO and a CFO, and that's kind of the C-suite of the management, or is there a CEO and a controller who is part of the management as well? Is that structure working for you as an organization? Does that need to change? The right personnel in the right places. Sometimes you may have other employees, other places that may not necessarily work out there, but you can repurpose them, for lack of a better term, reutilize them, and sometimes cross-utilization in other areas, and they may flourish where before they weren't flourishing. And so that can be a more cost-effective, more expensive way to repurpose people to look at it in a different light and say it's not going to cost me to, change that employee, that position, where you're changing multiple positions, where in fact you could just repurpose someone into another position where they flourish and where they may, excel anyhow to help you better your organization as a whole. So there's lots of different things that can be looked at there. But kind of as I mentioned in these bullet points, these are some of what we're looking at, and there's lots of different things that can not only be added into this but taken away from this to look at the different tools, the different opportunities that can exist and can change things. So to further the restructuring kind of definition, you look at the understanding of restructuring services. These are general services that can be expected in corporate dealing with a corporate restructuring, and some of the aspects of practitioners, capital resources that can be involved. So some of the typical services, you look at different organizations, different companies, they offer varying forms of restructuring and turnaround. And so the top one is the restructuring and turnaround services. Now that encompasses majority of what's below, but it can also encompass other things outside of that. It can encompass, going into an organization and kind of looking under the hood and saying, hey, here's opportunities, here's weaknesses, here's where we seeing different market indicators based on our experience, down to the typical CRO, Chief Restructuring Officer, Financial Advisor, Trustee, those avenues as well. So that's kind of all encompassed in there. Cash flow management, talked about it in the previous slide. Cash flow management, is something that is oftentimes necessary to institute tools, 13-week cash flow, various others. And sometimes these organizations, they already have something like that, but it may be tweaking the view. So it may be looking at it in a different light. Oh, hey, yeah, I didn't look at it in that light. Here's how we bridge that gap from another view to our perspective. Sometimes it's creation from new. So it's not that it's not managed, but it's not managed in a aspect of being in one place one time. So it's also, hey, how does that get updated? How do you look at who's updating that and where are you coming from? So a lot of that can be through updating weekly, but also at weekend meetings saying, hey, where do we want to go? How did that turn out? So the actuals versus the forecasted or budgeted. And then kind of repurpose, change the variables, change the thought based on what cash you think is coming in so you can manage from that level on up. Reshaping the business model, revenue sources and cost structures. Well, that kind of goes into the first two, but reshaping the business model. Is the current business model accurate? Is it out of date? Do we need to get into other aspects? Have we learned from past experiences that maybe we need to tweak what we're doing out there for our clients? Is it a service that, hey, maybe they are actually asking for something else when we've been giving them that particular service for some period of time? And maybe it's a long period of time, maybe it's 20, 30 years. But it's evolving into what they need, and to really look at, how can you progress this company forward? And that goes into the revenue sources and cost structures. And sometimes revenue, you look at it and say it just needs to increase, but there are costs associated with that increase of revenue. And maybe it is only personnel, maybe it's equipment, maybe it's fuel. There's different metrics and things that can be looked at in that reshaping of the business model. Distance and balance sheet restructuring kind of goes back to the modification of debt, modification of capital, change of capital. Is the balance sheet working for you? So, is there, what are the accounts receivable look like? Are they increasing? Are they decreasing? Days outstanding. If you have inventory, what's that look like? Is it changing? Is it going in the right direction? To the payables. I mean, you look at accounts payable, and is there a trend there? Is there something that is not necessarily working for you? Is there a build when there doesn't need to be a build? Is it change of terms? Is it new clients, new customers? Then short-term, long-term debt, if that is a part of your balance sheet, is that working for you? Is that revolving line of credit, for example, helping you maximize your business and manage your business through that type of debt instrument, through that type of tool? What long-term strategies do you have in place? Do you have leases out there on equipment? Do you own your equipment? Is the equipment financed? What is there equity in that equipment that you can utilize and kind of relook at? And then down to the equity structure, the ownership structure. What does your equity look like? Are there different tranches? Are there different conversions? What triggers a lot of this, and who has what say in the company? It goes back to the management as well. So, and then, for instance, not all companies, not all situations, organizations are in a situation where bankruptcy is an option. But when you look at the bankruptcy ideology or other processes that are somewhat similar, I mean, you really need to look at, is that right for the current situation? What are you trying to do? There's different forms of bankruptcy. There's different forms of consensual foreclosure, UCC foreclosure, the ABC routes, state routes, federal routes, and there's lots of different things that can go into that. But it also does cost money, and it also costs time. What is the goal? Is the goal to keep the company going concern, isolate certain things, get into a situation where you can negotiate better, or would it be more beneficial to stay outside of a process and get something done? And then, if all exhausted, you look at various other options. Complex financial reporting. Every company is different. Some companies have more complex financial reporting than others. So look at reporting packages, systems can be a big indicator of whether there are issues, whether there needs to be change, whether there needs to be resources come in and help you look at that. So that kind of goes to the next one, process and technology review and implementation. I mean, a lot of times you also get in there and you need some help, or a third party comes in and looks at the different processes that are in place. Is there a broken process? Is there a process that's not there that needs to be initiated? And if so, what does that look like for maybe other organizations, other experiences, and how can you better that process? Maybe it could be out in the field. You've got a paper ticket that's being handed in, and you can't figure out why it's not being handed in to the business office in a rational, shorter period of time. What's that process that's in place? Who are those individuals involved? How can you better that process? How can you help that process? And that's just one example. Technology, is a huge player. and will probably continue to be a player in most organizations. I mean, you've got accounting software. Some have operational software. Some have CRMs. I mean, some have all. And how do they talk to each other? How do you get the right information you need in a very short period of time to manage your business, to understand what is going on? And there's lots of different systems out there. And so each company needs to look at, what system is the best? What do you currently have in place? Are they talking to each other? Do they work together? Or is it a very manual process that, you could look in and say, hey, I could streamline this process and make it a lot quicker, a lot easier, more efficient. In turn, we're more profitable because we're being more efficient with our time. So that's something that goes into the process, but also goes into technology. Strategy and organization. I mean, strategy is what is your strategy? What are your goals here? I mean, what are you looking at? Strengths, opportunities, but also the weaknesses, and what needs to change. Are you learning from the past? Are you going forward? Being a part of different organizations, being a part of your client, being a part of your vendors, really integrating yourself into all facets of your organization. And that kind of goes into the corporate finance, enterprise risk. I mean, corporate finance, services offered, you look at KPIs, you look at analysis of varying degrees, budgeting, forecasting. And so you can go into different realms here, but it does help as different tools are initiated. And sometimes tools are already there, but it's looking at different things different ways, or looking at the same thing same ways. So, and then you got enterprise risk. I mean, there's what are the inherent risks of your business? What are market risks? What are different risks associated with different businesses? I mean, sometimes they intertwine, sometimes they don't. And then you kind of bridge over to the understanding of the practitioner experiences of the service areas. I mean, a lot of practitioners have varying experiences. Some, upstream, some oil field services. So it really can range. Some have a broad range of experiences. Some, larger groups have lots of different experiences among lots of different resources internally. So they may have someone who's been an petroleum engineer that may be needed to look at, not only different reports, but different parts of your operation for efficiency. Also have someone who's been a CEO of an oil field services organization where it's kind of more from the broader range from the strategy perspective. So working together to get that right experience based third party really can help you look at things from a different perspective. And going into the human capital resources, I mean that's kind of goes along with that. Does somebody have the resources internally in an organization to get what they need done? Do they have the accounting staff to get what they need done in a quick manner? Can they close their books 20, 25 days after the end of the month? Are you getting the right reporting package? Are you getting the right detail of what you need? Operations, are you getting the work done in the field in a timely manner that gets you paid and gets everything continuing and growing as needed? And practitioners can also bring some of those resources to help you get to where you need to go, to kind of show you, hey, look, I know you need to spend time doing this. We can help you get what you need in order to spend time and kind of show you, hey, this is what we think it would look like, and then work with you to say, maybe you say, well, I'd really like my organization to look like this. How can we do that? So it's to work with you to get to that point. And adding additional resources, oftentimes is beneficial. And then that goes into complex financial and operational issues, experience with technology disruption, commodity volatility, supply and demand chains. That kind of all goes into operational knowledge, kind of goes different basins, goes into, they're one and the same, and that really the experience and the resources available are something that can greatly help you out. Areas of focus within restructuring, and these can all work together sometimes. They can be isolated. It really depends, but restructuring turnaround, interim management, strategic consultation, business improvement. So restructuring and turnaround, partner with management to get done what you need to do and to help them, whether it is something that is somewhat forced by other stakeholders, or it's something that management decides, hey, I need some help in here. And that can take many forms, many shapes. And then you look at the situation, key performance indicators, dashboards. I mean, these are tools that can help you to look at your business, from different perspectives, but also give you real-time information. And then management cash operations, 13-week cash flows, budgets, through statement. And we've discussed this earlier and probably discussed this throughout. But I mean, these are tools that can help you manage the ultimate results and getting to the ultimate results. So the financial processes, procedures and improvements, looking at operations. So from the ground up and the top down, I mean, there's many different ways to look at this. And then sometimes, so the restructuring and turnaround can take the form of, hey, I need somebody to go in there, look under the hood, tell me what's going on. Interim management gets into the situation of maybe you're missing a member of the C-suite or missing, some part of management that's not there, and you need someone to help step in. Maybe somebody's leaving, maybe somebody needs to leave. Maybe there are different indicators of, a short-term kind of solution, and short-term can take the time period. The horizon can ever-changing. So, it really kind of differentiates between every organization. But, looking at the chief restructuring officer, I mean, the CRO can step in and really try to help understand what's going on. Operating partners, there's a lot of different things here. Strategic consultation goes in with this, business improvement, analysis, different tools in place. I'll hand it over to you, Emily.
All right, thank you. Our first polling question: how do you see restructuring benefiting your organization? And your options are A, cash flow management, B, increasing revenue, C, do nothing and hope for the best. And I'll give everyone a few moments to respond. To participate in our polls today, please click the button next to the answer you choose and hit submit. And if you have any difficulty seeing the polls, you may try refreshing your browser. I'll give everyone a couple more seconds. And let's go ahead and take a look at the results. Chris, back to you.
Thank you, Emily. I appreciate everybody answering the question. Yes, the correct answer for this specific question and choices is cash flow management. I mean, now there are varying methods of looking at the others. So cash flow management tool, again, as mentioned before, tool to visibility into what's coming in, what's going out, what needs to be spent. Increasing revenue. Now, if you look at increasing revenue, I mean, there's options here that increasing revenue can increase expenses as well. But yes, I mean that can bring in more cash, and kind of goes back to the cash flow management tool. All right. Go on to the next. Restructuring indicators. Consultants bring full suite of restructuring related services to the equation. So, with experience, debtors, creditors, equity holders, various other aspects of this, the stakeholder base, and other aspects of any process procedure that may happen, or any consulting engagement as well. So the following are tools can be used to assess the situation. Consultant brings a vast amount of experience and knowledge to the table, not only from the industry, but also experiences past, different type of companies, different operations, like understanding and viewing different things from different perspectives. So with that said, your business can benefit from restructuring and turnaround if you experience any of these following situations. And these are not just the ultimate situations. These are some situations that can happen. So there are others, and as I've said before, organizations are living and breathing. each organization is different. So each organization may have certain symptoms, may not, may have other situations that they need. So your business having cash flow issues and doesn't know what to do. Obviously, as I've mentioned before, there are different tools to look at and to help utilize and look at from the outside in. It could be a collections issue. Does it just need a little more 10-11 care with the client? Just more face time to get that. Is there a certain systematic issue with your clients, with the industry that's changing that, with that revenue cycle, expenses as well? So business margins are significantly lower than the industry average. There's lots of different indicators on this one, lots of different things that can happen. Is it an efficiency issue with your organization? Is it a contract issue? Is it time to renegotiate? Is it time to look at, are you in a profitable service line, organization, whole structure? Lots of different things can go into those margins. Are you facing unfavorable market conditions? I mean, there's different cycles for this industry. There's different things that can change the dynamics of your organization from the top down. Business needs additional resources internally to deal with significant changes. That kind of goes on the last slide I spoke of before the question. I mean, resources can be great. Resources, if you look at and you need additional resources for an interim period of time to get what you need done and to get that process in place, it can be fantastic. Is it a longer term resource base where you don't necessarily need, either an individual full-time or you need an outside perspective to get to where you need to go? So looking at that can definitely be an adherence, but ultimately be an advantage on how it's dealt with. Your business has an interruption or been impacted by a disaster. I mean, hurricanes, tornadoes. You've had to shut down due to deferred maintenance. So there's a lot of different things that intertwine with that business interruption impact. And I mean, is there some solutions, and these are common, and you have insurance. What would that look like? How would I get recapture some of those expenses based on whatever that interruption or disaster that's happened? The business owners don't know how to handle adverse conditions facing their businesses and need options. I mean, look, businesses are run as they are run, and more often than not, most people are integrated within these companies, but oftentimes need some group looking outside in to go, hey, look, there are different options here in different times. So, current course, what does that look like? Worst case scenario, what would that look like? And upside, sometimes you look at upside too, but that's more of a planning perspective. So then to get to the business owners can't obtain traditional financing, assistance with various financing and operational resources. This kind of goes into the modification of capital and debt. So, what are the options available for the need of the company and the stage of the company, status of the company, and what service product line you're in as well. So there's different, and lots of times, not always, but lots of times there are options. Now it may cost more, it may take more. So it really have to look at, does that work for your organization? Business owners are considering retirement, succession, and need to determine options. I mean, not everyone is a succession plan we've got in place. We've got a plan in place for this, and this to happen. It's more of, hey, look, I want my business to continue. I do need help figuring out what those options are if I step aside or if I bring on a new partner or X, Y, and Z. So there's a lot of different things that can be looked at there. Emily, I'll turn it back over to you for another question.
All right, thank you. Our second polling question, what is a potential indicator that your business may need to be restructured? And your options are A, cash flow issues, B, steady growth, C, increasing margin trends. And as a reminder, if you would like to receive CPE credit for today's webcast, you will need to respond to at least 3 of the 4 polling questions. Give everyone a few more seconds. All right, let's go ahead and see what everyone had to say. Back to you.
Thank you. So, as most of you answered, cash flow issues, yes. I mean, that is, and then that's a common theme here, but that is an indicator that, yeah, there could be opportunity within restructuring. However that may look, however that may come to fruition. So, with that, okay, examples of benefits. So, these are some common examples of benefits from restructuring. And in a variety of areas, but once again, they're more general as to what can help and how that can help. So strategic alternatives presented to offer additional solutions to the problems that may exist. And this may be looking at 4 or 5 different strategic alternatives as to the current model. And maybe you already have 2 or 3 that you've been looking at, and maybe it's more of, hey, let's do the analysis. So taking the approach of the resource base, you guys need to run your business. Let us run the analysis as to what these different strategic alternatives you're currently looking at, and if there are any others, and present these to you in a form and fashion that makes sense, that's rational, and to say, look, this is your ultimate decision, but here's pros and cons as we see it, and then make it a collaborative effort. How we work together to not only tweak this, but hey, you may know something that's not initially in what the findings are, deep dive. So it's kind of looking at, hey, are there symptoms here? Is there an issue, or is there great opportunity in where you are? Modification of debt terms, business plan initiation, creation, operations changes. I mean, this once again, modification of debt and capital that can change the dynamics of your company. Business plan initiation. Has there been a business plan created? What's the business plan that's currently in place? Is it out of date? Does it need to change? Utilizing resources that can help you do that while you run your business. And that's something that definitely needs to be looked at, is when you're changing things, looking to restructure, looking to kind of tool your organization. Focusing on your business, but also having others outside assistance helping on the analysis, helping on looking at processes, procedures, how things interact and how you're making money can be a great advantage and great tool to help you look at all your options. Pricing, near-term, distress drivers, and hedging, more an example. Assessments of supply and demand based on international dynamics. And these kind of go along with business plan, business operations, looking at different things, capital availability options. Do you need capital for future projects? Do you need capital for heavy equipment? Do you need to retool the heavy equipment? Is there things here that can be done to free up cash if you don't have that free cash? So there's different things, and that's kind of looking at CapEx budgets, decreased liquidity, lower expected returns. How does looking at downside help you retool those budgets, retool that liquidity, that cash basis, but also saying, hey, I still need to do this to my business on an capital expense basis. Reworking operational budgets, looking through these budgets, kind of poking holes if holes need to be poked, throwing out different variables that can be put in there. And that goes along with operational assessments, synergies, and efficiencies. I mean, obviously you want to be more efficient, and whether or not you look at it that way, it can help for an analysis to be looked at and say, hey, look, there are opportunities here. And maybe it's getting into different things. Maybe it's utilizing what you currently have to get into different revenue sources or avenues. Emily, I'll get back to you on the question.
All right, our next polling question. What is a potential benefit of restructuring? A, modification of debt. B, new business. C, giving the company money. And for those of you that would like a copy of today's slide deck, you may download that from the folder that says Slide Deck and Handouts to the right of the slide view. We will also be sending the slides via email after the webcast. A few more seconds here. And let's go ahead and take a look at the results. Chris, back to you.
Thank you, Emily. So yeah, once again, looking at these question and the answers, modification of debt is definitely a benefit on kind of restructuring of your organization. New business, giving the company money, well, modification of debt can be new money availability, but there's different avenues you can look at. New business can be afforded through the modification of debt as well, freeing up for expenses, freeing up cash, freeing up different resources. Categories for corporate restructuring. So as I mentioned at the beginning, I put this into 4 different categories. Yeah, first is financial and operational performance strategic realignment, but this is pre-forced restructure. So what I mean by that is there's different factors that come in that are where you're sitting there looking at it and saying, man, I need to realign my company. I need to change different priorities. I need to change clients. I need to change different aspects of this, but also looking at this and saying, look, I am not in a dire straight situation. I may not even be in distress, but I'd love somebody to come help me look at this while I run the business. So there's lots of different tools that can be put in place, lots of different perspectives, analysis, assistance, resource assistance that can look at that. And I'll get into that further here in a minute. Crisis management. Tough decisions, situations do arise, and sometimes it's taking a third-party approach, taking the emotion out of it, understanding that you and the organization have been running this, and sometimes different perspectives can be looked at, different decisions need to be made with help to get that done. Third, positioning for a capital raise, distressed M&A transaction. These are typically exits. What are the exits? And the exit can be the capital raise. Restructure your company, recapitalize your company. Hey, sometimes it can be a sale. I need to get to a sale. So help me get to that process. And maybe it's a failed attempt for a transaction. And kind of going in there, retooling what needs to be done in order to get back on track. And then the distressed restructure reorganization. So this is the true, you're in trouble, there's issues here. What are the best options in helping you get there? First, we're on financial operational performance, strategic alignment. So there's some challenges here, common symptoms. Change in operations, decreased margin, increased cost, debt levels increasing. There's no way of paying this down, over advance. There's issues with under collateralized, availability. So there's lots of different things out of compliance, availability of cash, in a cash constraint. Accounts payables increasing, collections times and ARs increasing as well. So below are some common tools, common examples of how to kind of combat these challenges. Analysis, organizational structure, creation of 13-week cash flow, creation of budgets, forecasts, and plans with different variables, really breaking out the whole aspect of your company. And that kind of goes along down overhead, operational cost structure. Shedding non-essential operations and footprint rationalization. Do I need to be where I am? Do I need to be elsewhere? Can I get rid of operations that are not as profitable or not profitable at all? And budget analysis can help with this, budget and planning, review and assessment of short-term, long-term options of financing. What's needed, what can be looked at here. Crisis management, there's tensions can increase between the debtors and the creditors. There's issues with vendors. There's, liquidity, inability to make sound decisions based on what's being presented, and in the time frame, a lot of times what needs to be solved, for lack of a better term. So solutions, provide data analysis to help through the tough decisions, be that resource arm to help give informed data in order to make that. Board of Directors and Management, sounding board for ideas and strategies. Third parties, mediation can happen as well, reassessment of the business plan, initiation, creation of business plan. Capital raising, this is more, once again, as I kind of talked about, an exit type deal where, maybe there's pressure to get out of the current capital situation you're in, whether it's to refinance, whether it's to get, take out equity, increase equity, take on new partners, pressure to sell the business outright, and there's lots of different indicators for that as well. Rationalization in the industry, shed industry aspects of this, shed industry portions of your company that don't make sense. You need liquidity. So below are some common tools. Third-party insight, management, coordination, assistance of the process flow, either to an investment banker or to potential buyers or to banks. So there's lots of different things that can happen. You can run that assistance while you are running your organization. And you can look at some of the other examples here. Distressed, restructure, reorganization, this is more the force, this is more this trouble, distress situation, and you can kind of see different things. A lot of these do intertwine as to why you need to make these different decisions, but these are kind of unique aspects. How can you help? Cash management, different tactics. Yes, in this portion, if you're looking at bankruptcy or other processes, it's preparing for these. It is a daunting task. It can take a lot of time. Even preparing for, a restructuring agreement with a bank. I mean, it can take time in a short period of time to get what they need done and to get that done in order for them to make a decision. So, and that can be interim management as well. Emily, I'll hand it over to you for another question.
All right, our final polling question. What is one of the focus areas of restructuring? A, crisis management. B, purchasing a work truck. C, assisting maintenance and required equipment fixing. I'll give everyone a few seconds here. Once you have completed all CPE requirements, you will be able to download a PDF of your CPE certificate from the CPE progress window to the right of the slide view. And let's go ahead and see what everyone has to say. Back to you.
Thanks, Emily. So yes, one of the focus areas of restructuring that I've mentioned is crisis management. The others are go into various focus areas or various types of restructuring. So crisis management definitely is one. So as I mentioned in the first slide, these are example indicators, whether they are industry indicators, company indicators that deal with creditors, deal with forecasting, budgeting. These are just some examples of looking at what different opportunities can lie from looking at a restructuring ideology. So I won't go through every one of these, but the reserve base, looking at borrowing base, determination, redetermination, when is it redetermined annually? How is the bank looking at it if a bank is involved or a secondary source? So looking at that, and is it PV10 to debt? What are the covenants? PV10 to debt covenants. Is there a liquidity covenant? I mean, there's lots of different things you can look at here and say, hey, as far as a borrowing base goes, reserve base, indicators, how do you currently look, where do you want to be, and is there indication of stress or change that needs to happen? Cash flow returns, underwriting, I mean, I put in $50 a barrel, W2I. I mean, it could be that you look at it on a $35 basis. And if now you look at it as a different aspect of, I want to look at the pure downside and things above there. So, 50 could be the base case and 30 could be the worst case or low case scenario. That's looking at the different indicators, looking at different variables that can change based upon your budgeting, your forecasting of where you want to be. Outspending of organic cash flows. I mean, that's cash crunch issues. What other aspects can you get into? Are there other collections that can happen? Are there other avenues that can be taken to get back to either cash flow, break even, or cash flow positive situation? High cost producer, so potential hedging. There's different other things that go into the cash flow returns, and whatever type of company you are, whatever part of the market you're in, can change the dynamics of how you look at this. Capital expenditures. What is the CapEx budget for the year? How did you do last year? So looking at actuals versus budget, but also what do you need to get done in order to be in your ultimate goal, ultimate plan? Is it cutting the CapEx budgets in order to stabilize? Is there a huge cash issue? You're not getting paid on time, so you need to drop rates. So there's lots of different things that can be looked at here. But borrowing base, kind of already talked about it. Borrowing base annual redetermination, liquidity, valuation reductions. I mean, there's lots of things that can occur more in the debt structure type situation. Capital markets, seems to be capital markets are very limited right now as far as available new capital or even existing capital on re-upping or kind of retooling what's needed. Based on market views, stabilizations, what's going on in your current situation, debt maturities, have they come up? Are they currently coming up? Is your term maturing? Is it an annual type deal that has to go back to an investment committee, a credit committee, whatever that may look like. So M&A activity, there seems to once again be activity, but it kind of changes depending upon what type of company you are. Their liquidity constraints, maybe they've got burned in the past, maybe they don't have that allocation anymore. The more patient, the more long-term, as I said, kind of the family office type situation, may be more interested in selective acquisitions based on, what's needed. Is it a bolt-on? There's lots of different scenarios there. So lastly, who benefits? Help companies, business-dependent, every stage of operations, from initial development, succession planning, sale, merger, liquidation, kind of looking at some of these on the stakeholder basis. Upstream E&P, oilfield services, midstream, downstream, domestic, global, publicly, privately owned, onshore, offshore, royalty, helping the companies out as well as helping other stakeholders out, kind of figure this whole equation out and get you to where you need to go. In conclusion, well, I guess industry has many different strengths and weaknesses, some stronger than others, ever changing. So really kind of what I was trying to get to in the insights for today's lesson presentation, definition of restructuring, generally different indicators, benefits, examples, different areas of focus, positive effects on the boots on the ground, proactive team, creating hands-on problem-solving approach to creating solutions and opportunities for complex issues and proven results for you. And with that, that's the conclusion of the presentation.
All right. Thank you so much, Chris, for a great presentation today. We are just about out of time for questions. If you have questions for Chris, you may still submit them in the Q&A window, or you may reach out directly to him using his contact info in the speaker bio widget. As a reminder, if you attended today's presentation in a group and would like to receive CPE credit, you must complete the group attendance sheet found in the slide deck and handouts window to the right of the slide view. If you participated as an individual and met all certification requirements, your certificate is available to download now in the CPE progress window. I'll keep the webcast console open for a few minutes to give you time to download your CPE certificate. A copy will be emailed within 3 weeks should you have any difficulty downloading it now. Here is a link to an online survey where you can provide feedback for today's presentation. Please take a moment to complete this survey, as your feedback is very important to us. Thank you for joining, and we hope you'll join us again next time.